House Republicans planted a ticking time bomb in their tax overhaul. The plan, they say, is built to benefit the middle class. Indeed, that's purportedly the entire point of the exercise. It's very clear and obvious that the whole purpose of this is a middle-class tax cut, House Speaker Paul Ryan, Republican Wisconsin, told CNN's Phil Mattingly in a Thursday interview. But because some of the credits the plan extends to middle-income earners expire, some of those taxpayers will see their burden increase after 5 years. My colleague Heather Long lays it out. The Joint Committee on Taxation found that the GOP bill would add nearly $1.5 trillion to the debt over the next decade, and that, on average, families earning between $20,000 and $40,000 a year and between $200,000 to $500,000 would pay more in individual income taxes in 2023 and beyond. Junction does not explain why these families see an increase, but it is likely that it's in part because some tax credits aimed at helping the middle class expire in 2023, including the Family Flexibility Credit. House GOP leaders say taxpayers shouldn't worry. Future Congresses no doubt will vote to preserve the breaks. It will never go away, says House Ways and Means Committee Chairman Kevin Brady Artex, per the Wall Street Journal's Richard Rubin. But Republicans made a decision to write that uncertainty into the plan to make their 10-year budget math wash. It reflects a choice to prioritize permanent corporate cuts over providing the same guarantee to individuals. And recent polling shows most Americans aren't inclined to accept GOP assurances that this will work out in their favor. As the Washington Post's polling whizzes Scott Clement and Emily Guskin reported Friday, based on the results of the latest post-ABC News survey, a third of Americans support President Trump's tax plan, while 50% oppose it, a 17-point negative margin driven by overwhelming opposition from Democrats and skepticism among political independents and people with lower incomes. The poll was conducted Sunday through Wednesday, completed before House Republican leaders released their bill Thursday. 6 in 10 say Trump's proposals on cutting taxes favor the rich, a perception that has dogged Republican efforts in pursuing tax restructuring for months. That opinion is not fatal, as a similar share said the same about George W. Bush's tax proposals in 2003, though his 70% job approval ratings provided more political capital than Trump's standing, which is at or below 40% in recent polling. Skepticism runs even stronger among those who stand to take a hit down the road, the poll found, with 58% of those earning under $50,000 opposing the tax plan. Voters in that economic bracket made up about a third of the electorate in 2016, and Clinton beat Trump among them 52% to 41%. It stands to reason that people who voted against Trump also don't trust him to rewrite the tax code. But the plan remains underwater with those in middle and upper income households, as well. It doesn't help matters that the GOP plan has earned a handful of detractors with potent grassroots networks and plentiful resources to plow into making the case that the overhaul disadvantages working Americans. The National Association of Realtors and the National Association of Home Builders already are making that case because the plan limits the mortgage interest deduction while doubling the standard deductions, potentially rendering worthless some of the surviving write-offs. And the National Federation of Independent Business, whose endorsement carries unrivaled weight for many Republicans, opposes the package for failing to do enough for smaller businesses. House Republican leaders have demonstrated their willingness to adjust fundamentals in the package. The day before rolling it out last week, as they scrambled to limit the deficit impact, they intended to sunset the corporate rate cut. At the proverbial last minute, tax writers decided to make that cut permanent, after all. And they have time to tweak the package. The Ways and Means panel meets at noon today to begin marking it up, a process that probably will last all week. But Democrats and their allies will be unsparing in attacking the bill as a thinly veiled giveaway to huge corporations and the wealthy. For now, they have the official scorekeeping to justify the claim.